Biggest thing for me was that the Russell 2000 futures continued their slide. A lot of the regional banks are in this index. This future contract fell nearly 3% yesterday, so it's continuing its slide in the Asia session, falling 1%. I also want to check on how the Asia banks have been faring, whether it was Japanese banks, banks in Hong Kong, or banks in Australia. All the banking sector has been hit overnight. This Hang Seng one is important, Anna. The HSBC's Hong Kong listing is in this index here, but you can see the banking sector really followed through on what that U.S. close was yesterday when those big U.S. names took a hit.
Yeah, absolutely. And I suppose maybe this is made more painful for bank stocks because a lot of people had seen the attraction of bank stocks as interest rates were rising and net interest margins were benefiting. Now, the big four US banks, they're highly regulated. They tumbled still on this story yesterday. What's going on there?
Yeah, Anna, look, I've got a chart here which shows the tumble over a two-day period. $47 billion in market value was lost from the four big U.S. banks. That's Bank of America, Citi, J.P. Morgan, and Wells Fargo. Now, many are asking the mark-to-market losses, which Danny was talking about. This only really happens when banks have a huge loss of deposits, which is unlikely to happen in these big four highly regulated U.S. banks. I've got a graphic here, which is something that Danny was touching on when it comes to the SVB. This is the unrealized losses on banks' balance sheets that essentially are showing if banks sold their treasury securities in order to raise cash, that they would have to take these mark-to-market losses. Now, for the big four, it's highly unlikely that they would have this kind of banking run. Maybe for the more regional banks, it does pose a risk. But for the big four, those losses yesterday, some people are raising their eyebrows on whether it was just.
Yeah.